welcome to the Monday Futures Market Outlook for September 9th, 2013. This is Patrick Ceresna. As always, we start off with a look at the euro as it's trading against the US dollar. We've had some substantial weakness off the highs over the last 2 weeks, but really in the last day we've seen a strong reversal coming in. What's interesting is that this support comes right at a key Fibonacci level, which is where a bounce was likely to occur. With this type of a breakout strength that we have, we're asking the question as to whether the euro prior to the German elections will actually have the strength to follow through back up toward its previous highs. If this ends up becoming a wedging formation, there is room for the advance not only back to the 134.50, but even a potential breakout to 136 or even 137 on the upside. And while that certainly is a trading opportunity on the upside, we remain relatively skeptical that the euro will be able to maintain any sustained strength throughout the year. So any rallies to the upside here, you should treat it as a shorter term trade and be looking for an exit if it does follow through. Next here I want to make some observations on crude oil as it's trading near its 52-week high. We've seen now the test of the 112 area, which was one of our lower targets. We still had even measured moves that suggested moves up to even 114 or 116. Whether or not this breakout that we saw over here still drives one or two more spurts higher is quite possible. But at the same time, while we are optimistic that there could be some follow through on the upside, we also believe that this is a very short-term move. And once it finishes off the move up towards those areas or even double tops along these highs, we do believe that there is going to be a sell cycle in oil that is going to see a trade under $100. So very on the short term, we are still open to the idea where we could see even up to $5 higher on the upside, but are looking for a top to develop. Next here I want to take a look at copper. And copper has been relatively weak over the last few weeks, but is interestingly holding its support along its 50-day moving average here. It's still quite a mixed picture here. We haven't had any really bullish price action in copper, nor have we seen a real bearish breakdown. We want to remain relatively neutral and see what biases we can develop based on the currency moves. The US dollar has had some substantial volatility higher and lower in the last few days. We're going to let the trend develop a little bit and see whether or not that is impacting the movement of copper. If copper does manage to break out above the 335 level on the upside, we could end up seeing a move that could test the 345, 350 area up along here. And so there is room for a little bit of an upside spurt, but beyond that, we're just going to be relatively neutral on it right here. Next year I want to take a look at gold, and we have gold having gone through about a 5 or 6 day consolidation off of its highs. Impressively, we've seen gold holding a key support line around the 1350 level where we were anticipating some initial support. We are now going to be observing whether or not gold can break out here. We're going to be looking for follow through above 1400. If we see constructive price action, that opens the window for another advance in gold that can not only retest its previous highs, but we could even be heading up toward 1480 to 1500 on the upside. Now we still have not had that bullish breakout yet, so we don't want to be premature about an entry here, but so far the support has certainly been holding the price action, which is very constructive. Next here I want to take a look at the treasury bonds, and when we're looking at 30-year treasuries, we've seen a very pronounced downtrend as interest rates have been rising now to a multi-year high. The bonds here still have demonstrated a poor price action as we've seen lower highs and lower lows, but there's certainly a divergence in momentum. We're going to be looking to see whether or not the bulls can muster up a good counter counterattack back toward 131, 132, which may start giving indications of a bottoming formation, but we still have yet to see that. So we're going to give this a little bit more time. We think that there's only a limited benefit for remaining short bonds, but at the same time there's not enough technical evidence to be suggesting a new uptrend is about to begin, and so we're going to continue to observe how this develops. Finally, I want to take a look at the S&P 500 and see what's in store for the markets. At this juncture, we have now seen a short-term low at 1620, 1630 zone right along here, and that zone right there is definitely the short-term swing low. Now we are progressing higher. Our first upside target lies around the 1665 level right here, but there is room for the market to even advance up towards 1675, 1680, up into this zone right over here. That certainly may leave a few more days of bullishness in store for us as we move forward. But at this juncture, we also remain skeptical that the market will make new highs in this kind of a push. And so as this market breaks out here, it may draw in new buyers, but it likely is only going to be a bull trap that will ultimately fail and lead to another sell cycle. So while we are on the short term suggesting that there could be a little bit of further strength, we also are not encouraging the accumulation of stocks unless you are a short term trader and looking simply for a multi-day advance. That was your Monday Futures Market Outlook. Thank you for joining me.